everyone, this is Claire, and today I'll be addressing a big question that people might be asking is if the property market is going to crash. I think this is one concern that some people might have, especially after the tariffs has been announced, stock prices went down 30%, but it's also bounced back up. We want to understand what are the different factors looking at property market and also looking at back in time where whatever events that have happened, what has impact on property prices have been, okay? And also, before I continue, I wanted to also share that generally property in Singapore has a safe mode. People come into Singapore to invest for a reason because it's what people say a safe haven for investors as well. So foreigners like to come in to invest as well. But there are a couple of factors to understanding why government does certain policies to make sure that the prices are moderated in some sense and it goes up moderately instead of like significantly, like for example over the COVID years. So now that government has already put in place some of the policies that are moderating the demand to make sure that the prices are stabilized a little bit so that locals can eventually, when the time is right, can still afford and upgrade as they go along. Okay, then in Singapore doesn't become too expensive for everybody. So this is really looking back in time and seeing what events have caused what effect on the property market, and then we can understand a little bit about government policies and also understanding where the prices are going eventually. Okay. So I'm starting here from 1997. Before that, I wanted to share the blue line CCR region, orange line is the RCR region, and the red line is the OCR region. So the prices have gone up generally from here all the way to today. We're looking at about 1.5 times increase. Okay, so it's still generally going up, but we want to know the factors that kind of moderate the demand, have dips in prices and all that, so that you can understand moving forward what you should be looking at in terms of investing. Okay, so we start off 1997, Asian financial crisis. The prices actually fell here about 30%, but it rebounded back quite quickly. In 2000, there's a dot-com bubble. The prices also fell again, and then there was a gradual rebound. My conclusion at this point of time, because I was still relatively young at that point of time, the government policies were not super strong with your ABSD, your borrowing regulations, and owning multiple properties and flipping immediately, right? I have some clients who told me that, they bought the entire stack, or they bought multiple properties. Like at one point, they were owning like 20 properties and then also flipping it a month later, 3 months later, that kind of thing. So there wasn't much of a control over there, but that was also because one, I think the government policies were not strong enough. Two, the population of wealthier people were slightly lesser. Overall population is also lesser, so there were not so much of many controls. Okay, in 2001, September 11 attacks, prices also hovered around this range. Okay. And this is more like my conclusion of the prices here in terms of the dips that we see over here and why the prices hovered. Okay, then we come to Lehman Brothers. At this point of time, over the past 7 years, actually the prices have up about 74%. Economy grew, prices also grew. I think there are more people coming into the market, understanding about Singapore. The whole trade and the overall economy has gone up also. So I think the impact in terms of Lehman Brothers, you can see from here to here is very, very small because overall the economy is just stronger. And you see that actually from 2008, after the short dip, right, prices actually went up all the way. When it comes to cooling measures, you see in 2010, there is a SSD period. That means for you to be able to sell a property, instead of waiting only 1 year, you need to wait for 3 years. And at the same time, your down payment, instead of just 5% cash, you need to pay now 10% cash. So it just increases the barrier to entry in terms of entering the market because anybody can just loan 95%. Just pay a 5% on a 500k property and take the loan, right? At this point of time in 2010, it's increased to 10%. So that has prevented people from owning too many properties at the same time, over leveraging, and then flipping for profit within that 1 year. Instead of holding the property for long, they try to flip it in a short period of time, and that have also driven the prices up all the way from the Lehman Brothers crisis to the point that the seller stamp duty from 1 year to 3 years was implemented. Then in 2012, the loan tenure has been kept to 35 years last time. In terms of borrowing and over leveraging, I think the people were really over leveraging a lot. So all these higher demand people like easy to come in, right? They inevitably driven the prices upwards. So you see from this period, the prices have gone up quite significantly. Let's say from CCR property 1,002 per square foot all the way to 1,008 per square foot. Then there's a TDSR introduction where the banks will look at your income before deciding to lend you the particular loan amount that you're looking at. Last time, I think in terms of controls were very little. So this also helps one over leveraging and making the higher demand drive the property prices up, like what we saw over here. So now we are in 2013 over on this time frame at this point in time, but you see that actually the overall prices from here to here, like I mentioned earlier, has gone up about 38%. You realize also the main part of market moderation when it comes to where the prices, when you see the hovering points, right, instead of the increase over here, they are mainly coming from cooling measures instead of world events. So it also proves that it's actually stability in the economy. If you look at Lehman Brothers during that period of time, a lot of markets like Australia, US, property market really crashed, and then you see the interest rates like flew up super high. But you see in Singapore, actually the good thing is that we're small as well. It's more control that we have. So cooling measures do play a big part on how they moderate the market. Okay, in the same year, there was also ABSD on second properties, so it kind of prevents the wealthy to own multiple properties. Like I mentioned, some of my clients had owned like 20 at one go, they bought the entire stack kind of thing. So that was not so much of controls, because at that point of time you could actually sell it the next day. So this part where they had the cooling measures, additional buyer stamp duty prevented people from buying. So the demand, you realize that they know that the demand here has been brought up by people who are wealthy being able to enter and own multiple properties. Then they control on the additional buyer stamp duty, the leveraging and the loan to value. And then it kind of moderate the market a little bit. But at the same time, this was kind of like a slow period overall for all the markets in Singapore as well. Then I would think that this period of time, there was a slight but necessary moderation that happened in this period where people could not own second properties anymore. Then they also implemented a couple of years later higher ABSD on second properties, and it kind of touched the segment of locals, PRs and also foreigners coming into the market to just kind of moderate it a little bit so that we still can protect Singaporeans from being able to own private properties. Then close to here, before I hop back to COVID, 2021, you see there's higher ABSD on foreigners, so they have raised that by 5 to 10%, and this helps to prevent foreigners coming in to own multiple properties in Singapore, knowing that Singapore is a safe haven, driving prices upwards and making it harder for people to afford. Okay, so there is also a slight necessary moderation over here. But more importantly, in 2023, because people see that through COVID and through multiple events, right, the property prices are still going up, and unlike in other markets. So in 2023, they have implemented what I call crazy ABSD rates for foreigners, 60% on foreigners. So it's a huge deterrence for anyone who want to buy a second property under the same name, that's one. And also at the same time for foreigners coming into the market. So it helped to move the needle to clamp down demand from foreigners, but not from locals. So you see, still in 2023 to 2024, we still see the prices going up because locals are ones driving demand all the way since COVID. So this COVID period, what my hypothesis is that spending on other sectors stopped because it locked down, but the spending shifted towards properties because at the same time, because foreigners could not come in to buy the properties, locals were driving all of the demand, locals and PRs mostly. So people who were bought during COVID, I would say 80% will make money and on average made about 28%. Okay, so you see here from average here in all the regions actually is about 28% jump since COVID. So here are my conclusions. If you're looking to invest this year, looking at the past trends since early 2000s until today, prices have gone up almost 200%. So what you need to be more aware of is understanding what property to buy and also at what kind of pricing, and knowing that you've got future demand coming in to buy your unit. And I think that's the most important. We know that Singapore has strong government policies that are required to kind of moderate and also promote price growth at the same time. Therefore, I would think that looking at the profits that you earn over the past 3 years during COVID may not be so reasonable. Maybe looking at a longer holding period to see good enough profits will be something that I would think 5 to 7 years would be a good time frame. So the fundamentals of Singapore government is one, low employment, high GDP, good leaders to kind of prove the stability, making a good foundation for investment. I think that's something that is constantly the government is kind of working towards, and it's kind of succeeding in all that. So on top of that, there's also always limited land supply and increasing population as well. So it's very unlikely for prices to fall drastically in the longer run. If you look at the graph all the way back again, you see that the prices have gone up to 200% over the past 20 years, and it's very hard for the prices to fall in the longer run. So still being invested is important, but of course choosing the right one is more important. Yeah, I hope this is helpful. More importantly, is property is still a way to build your asset and also the locking capital that will fit into your retirement eventually. But at the same time, you need to choose the right one and have holding power and also at the right entry price. So here's my number. Thanks for watching all the way to the end. If you like the content, feel free to like and subscribe to my channel. If not, you can also pause this video to WhatsApp me directly if you have any questions, and I'll see you in the next video. Bye!